Just sharing it.
Nice. Okay, so welcome to TFC Daily. This is an initiative by the team at the Financial Coconut to keep you company during this tough time. So follow us on our socials, check out all our podcasts for your continued learning and enjoyment. Simply head to thefinancialcoconut.com for more details. We have different segments scheduled for you. So today we have another two friends, cool guys, and every Monday and Tuesday, we will do Stock Geekout, and it's hosted by myself and Thomas. And this 8-episode series, assuming no circuit breaker, okay, is sponsored by Mumu. Important, right? Because if things escalate, then it will be more than 8 episodes. So, yeah. Okay, let me finish. Okay, so it's sponsored by Mumu, powered by Futu, which is an investment platform with a wide array of products from US stocks, Hong Kong stocks, ETF, REITs, and more. And they're seeking to create the best experience for you with free US and SGX market data, 24/7 financial news, and a global investment community so that you can say bye-bye to traditional brokerage, all the old interfaces. So go ahead and download the Momu app to open your Futu Singapore trading account today. Sorry for our Malaysian listeners streaming in today. This thing is only for Singaporeans at this moment in time. So yes, you get to unlock your one free Apple share today, but more importantly, okay, after this whole thing, you can go and download. But today, I just want to introduce you to two great friends of ours, MJ and John from FIRL. Woo!
Hello, everybody.
Yeah. Hi, everyone. Hi, Reggie. Hi, Thomas.
Nice.
Thank you for having us.
Great. It's been a long time. We go way back, man. Like since last lockdown.
Yeah, exactly. It's only like 6 to 7 months, but it's a very long 6 to 7 months.
Dude, it feels
in this kind of time.
Exactly. It feels like forever. So many things are happening, right? And we are just exploring, and the market is changing and all those kind of stuff, right? So essentially today, same as yesterday, the flow. The first part, we want to talk a little bit about what is your market outlook, right? How do you see the market currently? What is happening? What is in your purview? Number two, we're going to talk a little bit about your investing style, right? What is your core ideologies? What do you look out for in companies? And what governs the way you do things? And number three, then we'll go into the 3 ideas that you have brought for us, right? So that is how we're going to flow. So let's kickstart the discussion with what is the market like for you now? What is happening?
I think it's so apt that yesterday was actually a bloodbath on KLSE.
Really?
Yeah, it was quite a bloodbath. I saw a fluctuation of a 6-figure change in my portfolio over the past month. No joke.
Wow. No joke.
It's no joke. It's not 5-figure. It's a 6-figure change in the portfolio.
Yeah. No joke.
The market is jittery from the perspective of a few things. One is, I think Malaysians are very anxious on the COVID vaccination rollout. So that's a lot of uncertainty in which how fast can the economy recover. There were earlier talks on recovery sectors like even retail fashion like Padini and all that were getting a lot of attention. But because of the new lockdown and perhaps a prolonged lockdown, I think a lot of it has just end up in smoke, right? I think the other sector that has caught quite a bit of attention was actually commodities and also construction in Malaysia. A lot of steel prices have gone up, raw materials have gone up, and prior to lockdown, I'm a very avid badminton player. So my gang consists of some people in the construction industry, and they have told me that cost of construction has risen easily between 10 to 20%. All due to a lot of these, easily 10 to 20%. And what the more cash savvy or the more savvy constructors, what they're doing is they're actually hoarding a lot of these raw materials. So don't be surprised. I think the third sector that is also very interesting would be the plastics industry, because the spread for polyethylene versus raw material as well as the demand is actually seeing an arbitrage opportunity. That's why you see guys like LC Titan and Petronas Chemicals of Malaysia doing pretty well, and they've been re-rated most recently as well. So yeah, that's my stance. MJ, probably you have anything to add?
Yeah,
sure. I think we've seen the figures coming from the US. It's already, I think, 4% inflation, and this is not heard of for a very long time already. Part of it is manufactured, but really what that has trickled down into is just a lot of infrastructure spending, and that's where you see a lot of the construction guys start to do a little bit better. And basically what we're seeing now is a lot of the companies that did not survive so well, or rather did not do so well during COVID, are now starting to do better. So it's commodities, it's also, I mean, before our MCO, food, F&B, retail, all these things are starting to come back up. It's not quite there yet, like obviously with construction, because I think especially in Malaysia's case, people are more, the government is a lot more accommodative to the construction industry, so they can start business first, but maybe not like the food and business industry. So right. But yeah, basically you're seeing a gradual opening up of the economy. Vaccination rates are going up. And yeah, basically that's what I see. I think another trend that we are seeing also is now with the volatility, right? It's almost like the first test for a lot of what is commonly known as millennial investors. So COVID-19 will be our first, I say our because I'm in that group, right? The average millennial today, the average age is, I believe, 28.
Not young already. Not young already.
Not young. So you're right. So COVID is like, I wouldn't say it's our Great Depression of 2008. I wouldn't say it to that extent, but certainly it's our first economic shock. But what was interesting is that a lot of millennials who have no obligations. Perfect.
Go ahead, MJ.
Yeah, go ahead.
Cameo is a cool cameo.
Cameo.
So a lot of millennials face their first shock, right? So those millennials
just lock the door.
Millennials with no money had to face the issue of finding jobs and the bad economy and all that. But millennials with money, either those who are privileged or those with good savings habits, right? They actually got a pretty good break, or rather a very good run in the stock market. A lot of them started because there's nothing for them to do. They either put their money in the stock market or the crypto markets, right? These are two millennial hotspots when it comes to investing. So what has happened is that over the past year, many millennials believe that the markets can only go up.
Yeah.
And so what you're seeing now in the past quarter, or leading, we're almost half a year in already, is essentially our first test, right? As an age group, can we, now that we are at the age group where we have some sort of money and we have invested that money, this is our first test of volatility, something that our previous generations face. Some of them face poorer than others, but let's see how we do.
Fair.
See whether they have diamond hands or not. That's the other thing.
Yeah, diamond hands.
Diamond hands.
So the point of the commodities, right? Do you think it's something that is cyclical or it's here to stay?
In my opinion, I think it's very cyclical. But what's interesting also that abates this is actually the car industry. It helps. You'll be surprised that I don't know about Singapore, but in Malaysia, the car industry is going to see record sales this year. That's something that ironically came out of Southfield, and I think to Thomas's question about how I still think it's very cyclical because a lot of these demand for commodity was actually driven by unexpected demand, in the sense that a lot of slowdown in the supply, mining, all this disruption to logistics, to the mining, and then the demand of because of the unexpected sudden recovery. And once that reaches equilibrium again, in the sense with supply meets demand, I think we'll just go back to normal into a cyclical trend again. That's my view. I could be wrong, but yeah.
Yeah, it's our opinions. Yes.
Yeah, we have to remember why there's a commodity boom. It's simply because of money printing. That's pretty much it, right? So, I mean, in some sense, commodities will go up over time, right? That's why gold over the past 100 years has gone up 3 times because of basic inflation. But in terms of real, okay, I wouldn't use the word real, but really price increase for an extended period of time. Some people use the word like commodity super cycle, that I don't quite really believe. Anyway, it needs to, a super cycle won't need money printing to support it. That's how.
Correct.
Anyway, the commodities market is extremely complicated, right?
Exactly.
from the business to the supply chain to then the futures market is very complicated. We can talk about this, in a lot more level, the next time. But I heard this part about, John saying like the Malaysian vehicle market is coming back up, right? So is this like are we talking about like Proton manufacturing more cars and exporting abroad, or is it like just everyone buying more cars locally? That's why the market is growing. Like what is that?
Actually, it's more domestically driven. I think
so. People are buying cars in that sense.
Yeah.
Really?
John, we give him the example of the X70 and the X50. How fast it got sold out?
Yeah. Before that, Thomas actually had a question. I don't know whether it's related.
Why are people buying? Because people can't move around states, right?
Yeah, exactly.
Why are we not getting?
So you see, right? The government, the sad facts first are, I think the income disparity has even widened even more with this COVID pandemic, because who gets the hardest hit are actually those daily wage earners, small time retailers and all that. I think that we have to acknowledge that has actually widened even more because of the MCO and the lockdown. To your question about why are people buying, I think it's actually revenge spending. A lot of it the least affected are those MNC people, people in civil service. Actually, sad but true, Malaysia has, I would say, a very big civil service. I'll leave it at that. Okay. I'll leave it.
No, it's the country's biggest employer.
It's the country's biggest. Yeah. Actually, to be honest, it's a very bloated civil service, and they are the least impacted in somewhat. And back to MJ's point, which is very, very good, is that we had two quite big revolutions actually. One was actually Geely taking over Proton, the Malaysian national car. They have actually made, I think, a tremendous effort to turn it around, and I think they're really, really succeeding. The Proton X70 and the Proton X50, the latest model, which is a medium-sized SUV, you would have to wait for 12 months to get the car. 12 months right now.
Wow.
It's insane. Okay. And what exacerbates that again, the second national car, which is Perdua, it's actually a rebadged Toyota. You think of it, it's just a Daihatsu. They slap it with a Perdua badge, but it's actually a Toyota, right? And they actually recently launched this new model called the Ativa, and for a sub 70,000 ringgit car, you actually get features of that in a BMW. Wow. So you've got what do you call it? Side mirror sensors. Honda sensing, when you have this Honda Accord, there's this side mirror and then there's a there's like a buzzer, right? So you have that in a sub 70 car, 70,000 Malaysian ringgit car in Malaysia.
So it's definitely changing the whole market, right? How this whole thing. Anyway, one of our listeners have a comment.
Yeah.
I want the civil service here.
Monitoring your moves.
Which department?
Nice. No. Private. Okay. Oh, that's cool. So that's generally the market outlook. I think we're seeing a lot of interesting pockets happening, right? Where people are spending money, revenge spending, and you're really educating the Singaporeans about the Malaysian economy and the Malaysia stock market in general. I think not a lot of people talk about it, especially over here. Everyone talks about like US, China. Nobody really cares about the Malaysian stock market. But of course, you guys are focused there, so you will see it differently, right? So, do you want to walk us through a little bit about your investment ideologies? Like, how does it formulate your base ideas when it comes to investing?
Okay,
sure. I think one of the things that if anyone wants to, if people Google how to invest in the stock market, they'll usually come across the usual books and people to learn from. And it's very like style focused. So people will say, even today, right, I am a value investor, I am a dividend investor, I am a growth investor, I'm a whatever investor, right? So I think with Malaysia, we cannot we cannot tell the market how we want to make money. So if you are a growth investor, it's like you are telling the market, I'm only going to look for this type of companies, then I'll invest in them. With Malaysia, because we only have 900 stocks, of which 70 or 80% of them are not worth looking at. So in your whole life, you just need to look. You no, but
I don't know why that sounds very sad. Like 70, 80%
no,
of
actually,
company. Don't need to look at that.
80% is pretty
Forget
good.
it.
Pretty good, really. I think in the US is even the ratio is probably even worse. But anyway, so what happens is that the market actually has to tell you how you're gonna make money. So you don't get to choose. For example, I want to only buy low PE stocks, for example. That could work if you have an international mandate where you can hop from Korea to Japan to China to US. But if you're only Malaysian focused, you basically have to eat what the market gives you. And that is usually means that we'll have a very mixed kind of investing where on one hand, we like to buy those long-term compounders, right? Like we're talking about Timecom, right? That's a long-term compounder. But then there are also some where like Malaysia cement, right? With construction going up, it's a cyclical play. So then you have to do that. And during COVID, the tech stocks did very well, which is a cyclical play, but it's a longer cycle, I would say. So then we have to do that. So we have to follow where the opportunities are. And that's how we would describe our style of investing. But in terms of the fundamental basics, we are not too different from your typical value investor that really wants to buy good assets for very, very good prices. We want margin of safety, we want moats, we want longevity when it comes to the potential or the total addressable market. We want good management, all that good stuff, which I think people can read online. So on a fundamental principle basis, we are not that different. There's nothing complicated about it. It's just that when you apply those principles in specific markets, then some adjustments are required, and that's what we're doing.
Yeah, the nuances are actually very important. As what Reggie pointed out, you need to have your las and your bars in your English language. Then probably you can invest. We were just having a conversation, I think 3-4 months ago, with actually a Hungarian, and he's actually married to a Malaysian wife, and he's actually a very deep. He has done very deep analysis on the Malaysian glove. And
Bulgarian,
the joke we had. Yeah,
not
sorry.
Hungarian, Bulgarian.
Oh, Bulgarian. Yeah, Bulgarian. Sorry, Bulgarian. And
there are Bulgarians in Malaysia. It turns out,
Yeah. So the best part is that I joke with him. I mean, we're in constant communication and in our investing community. And I joke with him. I said, I think you know Malaysian economy and Malaysian nuances better than most Malaysians actually. It's quite surprising. Yeah.
Nice. Yes. So I think that kind of formulates the basis of your investment style, right? And then we have to go into the main juice for today, right? So for everyone, if you have all your questions, get ready, put it in the comment segment and we will call it out, right? Have your tea, have your whiskey, do what you need to do. But yes, the first company that we need to talk about today is Timecom, right? So I want to pledge that I'm a Timecom user, okay? When I was staying in Subang, I actually used Timecom. And for everybody that don't know what is Timecom, just to give you some reference, right? It is like the Circles Life in Singapore. So they are not the big telco in the game, but they are the disruptor, right? So they are here to disrupt and challenge the big telcos, right? And so I will leave you guys to share more about Timecom and why is this something that you're convicted about. Yes. What is that business model and all?
First and foremost, we have to thank you, Reggie. Thank you so much for your subscription. We have you to thank for the dividends as well. Okay.
Thank you. Yes, thank you.
So I think I'll take this one. I think the next two, John can take it because it's a lot more familiar. I can help out with MFCB as well, but Entegris is really John's interest. So to give some context to the viewers, I think over the past year or so, the stock, which I would deem a pretty low risk stock, has gone up about 50-60%, maybe slightly less now with the volatility. Doesn't look like a lot, especially when you look at the general market and how it has been, how it has grown. But essentially, it has been quite a stalwart, and it's a stock that is high price. Like it's I think 13 to 14 ringgit, which to the average investor means it's too much for me. I want to go
expensive.
For it's expensive, so I need to go for the 1 ringgit, 2 ringgit or less stock. Now, so basically what it is just simply an internet service provider. And you might wonder, like, how is that even interesting?
Yeah, sounds a bit lame.
And even in Malaysia's case, right, we are not like first world. Our internet penetration is really close to 80%.
Yeah.
So you might wonder, it's really the penetration is really like quite high. Where's the growth? So the growth actually comes from the fact that Timecom focuses on urban areas and very specifically high-rise buildings. So Reggie, I'm going to guess when you're staying in Subang, you were staying in a high-rise building, correct?
Yes. Main place, by the way. Just shout out to main place.
Yeah.
Yeah. Favorite
So-
condo.
So now the basic idea is this, right? As Malaysia moves forward, however slowly as a country in terms of the economy, what's going to happen is that real estate prices will go up, right? As real estate prices go up, people still need to stay. And the whole issue with Malaysians is that not a lot of them are staying in Terengganu, not a lot of them are staying at Pahang. They still want to congregate in the two big areas, Penang and KL, right? And so what does that mean? If real estate prices keep going up faster than income, which I think is a global phenomenon, but you want to go back to the same place to say houses are going to have to shrink, right? So what does that mean? What that means is that there are going to be a lot more high rises, either condominiums or even offices, right? Maybe offices now not so much with work from home policies, but definitely condos. So you see the cost, right? So let's go back into comparing Timecom with the big competitor, which is Telekom Malaysia. So Telecom, I don't know what the Singaporean equivalent one is, but basically it's the big dog.
It's like Singtel.
Singtel.
Okay, yes.
It's the big dog, right? It's the one that most people have. So the cost, right, to lay wires, to bring it to housing areas, residential areas, is actually the same for both companies. But they're not using any more special materials than the people they hire to build those lines or to pull those wires, same group of people, right? And so what this means is that if for Timecom, when they pull it to, let's say, a condominium, and even if they charge less, which is like 30, 40, 50% less, they've got a lot of people to pay for their services. So if they put it to one condo, how many units? There are 400 to 500, right? So the ROI based on our own research, right, is about 6 months. So the cost to put a wire, they get back that cost in 6 months. Now, if you contrast it with Telekom Malaysia, where the commercial interest is not as strong as a company, the commercial interest is not as strong as Timecom, but the national interest is a lot bigger, i.e. we want the whole of Malaysia to have the internet. So what they have to do end up is they have to start pulling wires very far into some kampong, God knows where. And then maybe that kampong only has like 40 houses.
Yes. And that's the problem with rural internet, right?
Yeah,
that's right.
And Singaporeans have no idea about what is rural internet.
You won't know.
Yeah, there's no rural, right? Everything is centralized, developed. Your HDB downstairs has all the wires and all, right? so it is extremely structured. And this is the problem with satellite internet that, the whole thing where Musk trying to solve this thing. So rural internet is essentially the comparison here. Between what Timecom is doing. So essentially they are cleaning out the whole rural internet portion. Is that what I'm hearing?
That is where TM is going. That is where TM will go. Time does not have to go there.
Yeah, they're not caring about that part.
TM answers to the government. Timecom answers to the shareholders. So just the cost structure alone is really completely different, right? From where I pull the lines from the telco towers to these hotspot or urban hotspots, right? How many km? 1, 2, 3, 4, maybe 5 km. But to pull it to kampong area, 20, 30 km. So the cost is really by a factor of God knows how many more. And then when you pull it there, the ROI, the kind of demand you can get for your services, very low. That's why TM has to charge higher than Timecom. Otherwise, they're never going to make a profit, right? So if you look at the financial numbers, I can't remember on the top of my head. I mean, Timecom is a lot better by pretty much every metric, right? Whether you're talking about margins, return on capital, growth. This is a company that is growing 15%, sometimes even 20% a year. And so, by lowering, no, they don't lower the cost, but by increasing the amount of data usage, but they keep the cost the same, right? So
But the data usage is a buffet, okay? For a lot of people that don't understand this game, right? Like when companies give you 20 gig, 30 gig, 50 gig, right? There's only like maybe the top creme de la creme, 10-20% of people will use that kind of bandwidth. Everyone else buys that, but they only use like 5 gig, 10 gig, and then there's Wi-Fi everywhere. So so this is like one of the ultimate telco hack, right? They sell you this unlimited plan, they sell you 50 gig plan. And for how much, and make you feel like, wow, 很多, like very worth it, huh? But actually, you don't use that much.
Korean dramas. There's only so many Korean dramas.
Correct.
Even if you stream it in 4K, it's also not that much.
Exactly.
And then Netflix does a great job at compressing videos as well. So even when you stream it on Netflix, a full HD movie is probably about 400 meg. So when 几时用到20 gig
yes, exactly. Yeah. So
for Timecom,
go ahead.
Sorry. So for Timecom, right? Do you see it's like a midterm to maybe short-term play because there's some limits to growth, right? It's only based off the cities that's being developing the high rise.
So actually, I do not think it is a midterm or even short term. I do think it's a long term. So right now, Timecom's revenue is roughly 700 million ringgit, if I remember correctly, right?
1.2
so,
as of 1.2.
Correct.
Yeah, B. Yeah.
So about 1.2 billion, and if about 30 to 40%, let's say 40%, right, of people become urbanized and start using Timecom, you're looking at a total addressable market of 5 billion. Now that's not super a lot. That's not like electric vehicle total addressable market, but certainly from 1.2 to 5, I can still see a pretty decent runway. And that's why I believe their growth, they may have slowed down a little bit, but it's still pretty healthy, especially for a company that is, I think, 7-8 billion market cap or slightly under. So in terms of that, I would say, but I do not expect wonders from this company, right? I really do not expect wonders, but they do have a wonderful business model and a wonderful management so far.
They're extremely automated. Everything online, purchase, everything.
Exactly.
Call
the
center,
user experience.
User experience amazing. Personally, but when not recommending this share, just from a consumer experience. I live in KL before, so I can say that this is the best experience amongst all the internet provider. Okay, but I totally get what Thomas is suggesting, that because in the internet space, it is so difficult to expand beyond your region. I mean, you look at Singtel, right? They struggle with that, so they go around buying all these telcos. Right, so they buy into the Thai telco, they buy into the Malaysian telco, they buy into Indonesian, they acquire because telecom business is extremely regulated. So I think what Thomas is trying to say is that is this a limited growth kind of company? Like at some point in time it will taper off. Companies cannot grow at 10-20% month on month, especially when it is in a very regulated space, right? But I do know that Timecom is trying to do a little bit of the whole cloud computing space, right?
Well, they are actually quite big. They are quite big in cloud computing.
So I know that they're trying to do this whole cloud computing thing. Do you have any idea or any comments on that part? So other than the traditional telecom, internet cable kind of thing that they are already in, is there a lot of like kind of growth space in this whole like cloud computing for Timecom?
Yeah,
actually, I think first of all, it's a small part of the revenue. I think something like sub 10, but another thing as well is that, I mean, historically, it has been quite choppy, the gains that they've gotten from this the data revenue. I'm not quite sure why. I should probably definitely look into it more. But that has been what they have achieved. So if I'm a shareholder, like for me, it's more of a moonshot thing. Like it could work, it could not work. It's great that they're trying it out. But if you're going to buy it based on available information, you're really buying it because of people transitioning into more urban, more condos, more things like that. That's the story, right?
Fair. And I want to add a little bit of color on that. Essentially, the regional internet, and the data centers are all located in Singapore, right? So they pull all the wires. So there are three major internet hubs, in this area: Hong Kong, Singapore, and Australia. So they're all pulled by underground, underwater wires, cables, right? So undersea cables, they all come here. And from my understanding of the Malaysian internet space, right, it is relatively slower, than the regional experience. So there are like a few data centers being set up in KL, in Malaysia, but there's limited adoption in the area. Everybody is operating out of the Singapore data centers,
Correct.
right? So maybe that's why the growth is a little bit limited, from that computing space.
That might change. That might change.
Really?
Because Singapore is deprioritizing the data centers, so they don't want to allocate so much because it's fossil fuel
sucking up power, is it?
Sucking up power, taking up space also. So I don't know. Closest neighbor, Malaysia, to benefit.
Johor.
Actually, since it's great comment, Thomas and Reggie. I do want to add also about this issue about cabotage. I don't know if you guys heard about this big hoorah in the news probably about 3-4 weeks ago. So the transport minister actually re-implemented this thing called a cabotage. I can't even pronounce it correctly. Cabotage charge. So what it does is that it actually charges a certain fee for vessels that repair underwater fiber optic cables. A certain charge if you were to repair within Malaysian waters. And because of that, Malaysia actually lost 2 important fiber lines to Singapore. Microsoft and actually I think it was Amazon or Facebook, I can't remember, either one of these companies. And the reason why, besides Australia, Singapore, actually the most important hub in Asia Pac, Reggie, ironically, is this place called Chikura in Japan. You can go Google them up. Chikura in Japan. That is the hub where all the Pacific lines actually land for Asia. Before it actually it's routed all the way down south to Asia. Now, to add more color, Time.com is the only company that has a direct link on land all the way from North Asia all the way down south to Singapore. Even TM doesn't have that. They actually have another few, I can't remember off the top of my head, but I know they have one dedicated line to Europe, and they share 2 and own 1 line to the US. While MJ rightly pointed out it's sub 10, it's not much, but it also goes to show the importance and also the leverage they have when they have this network. Because can you imagine they were sharing the fiber lines with guys like Amazon, Facebook, and Google?
Yeah.
So that
and exactly right. If you think about it, right, all these governments, they're trying to flex their muscles against Facebook, Microsoft, and trying to get people to pay for news and all that, right? Then it's like Facebook was like, oh, okay, you want me to pay for news? Oh, I don't feature you.
I just shut off the cable.
You try to text me. Oh, I just shut off your cable. So I think that is the dynamics in the space, right? But definitely important to know that in the data space, it is a lot more complicated than what you see on the surface. If you want to be in this space, you really need to understand the multiple tiers from the internet to the data centers to your providers, and all the way to your cloud. So all your PaaS, your AS, all those guys, you gotta look at them, you gotta understand them.
That's right.
So spot on. Spot on. Yeah.
Comment. We have a comment.
Okay.
Yeah, so let's answer the comment before we move to the next question, okay? Hi, everyone. Is the Malaysian telecom sector liberalized? Imply foreign equity participants can be allowed to have a slice of the pie, or are the telco licenses wholly domestic players?
Great question, Sandy. Great question. MJ, you want to attempt first?
I don't have much thought of this, but to answer the question, it is somewhat liberalized, or in theory. Liberalized in theory, but no. But to be fair, in practice as well. Like for example, the Telenor, which is from Norway, actually invested in DG a while back. Now they are merging or have merged. I can't remember what's the status.
Going to merge
with Axiata, which is Celcom. So we have 5 big telco players in the past. Now we have 4. But yes, to answer your question, they are allowed. They are allowed to do it, but that seems to be, to my mind, the only case so far.
Yeah.
So
correct.
Correct. Can Singaporeans invest in the Malaysian stock market?
Of course.
Sure, definitely.
Yeah, definitely. I think the other thing to add is also it's very similar to I shouldn't say similar. I'm not too sure whether Singapore allows spectrum bidding. So in Malaysia, it's all through spectrum bidding, and
Yeah,
I think
that's
that's
right.
where it allows the liberalization. But most of the time, as any nationalistic government would do, they will try to force the foreign partner to marry and then certain equity stakes. I think even in Indonesia, I think the maximum they allow a foreign partner is 40%, if I'm not mistaken, for most companies. Yeah,
Yes,
so the
yes.
similar practice is in Malaysia as well. Yeah,
I think in Malaysia, like it comes to all these projects, they are a lot more liberalized probably in the construction sector, in the infrastructure. They'll allow Chinese companies to build, or French, or whoever. Mainly because they don't have the expertise, probably. So
probably.
they'll
Yeah.
give it there. But in telco, so far, DG is the only case that we know of.
Yeah, very big lah. Yeah.
Nice. Which leads us to the next company, right? It's
Yeah.
a very big company, very diverse, also in the construction sector, right? Yeah. do you wanna bring us through? By the way, I just want to repeat, if you guys have any questions, just put in the comment section about the companies, and then we'll come back to you as we go along. Okay.
Yeah.
So yes,
Great,
let's move on to the next company, in our list. John, you want to take us through?
Yeah, so this company is actually is big, but a lot of people don't know them. I think for those of the listeners who are actually from Kuala Lumpur, and there's an area called Petaling Jaya, they actually are owners of this building called PJ8, but that only makes up like sub 2% of their business. A big chunk of the business actually isn't located in Malaysia. It's actually located in a country called Laos. I hope I pronounced it correct. Laos or Laos? Yeah, Laos.
Lao, it's Lao. It's
Lao, right? Lao.
Wow. Okay.
Yeah, and how significant this project is that it contributes roughly about 97% of the revenue going forward for this company. Now, so what so the company we're talking about is this company called Mega First Corporation Berhad. Long history. I did a YouTube video in it. I didn't even cover all the history because they were in chemical trading. They were trying to do everything under the sun. I put it this way. They were trying to do everything under the sun. And then new management took over. And they started into power generation in China and in Sabah. So they got concessions for a coal-fired power plant in both places. And I think that's where they gained the expertise to actually operate a power generation facility. And because of that, somehow or other, they landed, not somehow or other, I think they really worked hard to land this concession with the government of Laos to build and then operate a hydroelectric power plant in Laos. And it's a 25-year concession. So you have earning, virtually you're buying a bond. If you think of it this way, when you're buying into this company, you're buying a bond with a fixed, kind of like a fixed coupon rate. Because there is already a concession agreement, power generation supply agreement, and most of this electricity is actually sold to neighboring countries like Vietnam and Cambodia. Because Laos is a very small country. I think population is if not mistaken, probably about 5 million.
I think it's less than Singapore, maybe less than Singapore actually.
Yeah. So, yeah. But what's unique about this hydropower plant is, so I'm just going to go a little bit technical.
Apologies. Laos is more. Laos has 7, Singapore has 5.7.
Yeah. Okay, so 7. Yeah.
Hopefully we never beat them. Okay, I don't want to beat them. Okay? Enough of people here already. Go liao.
Too congested.
Yeah, too congested. Yes. Continue, John. Yes.
Okay. So where was I? Okay, so what's unique about this hydropower plant? It's about 260 megawatt. So to give you a sense, I think the Three Gorges Dam, which is one of the world's largest. MJ, can you help me find Three Gorges Dam? What's the size of the generation capacity? Yeah, and then what's unique is that it's called a run-of-river hydroelectric power plant. So run-of-river, most of the hydroelectric...
It's 22,500 megawatts for Three Gorges.
So there's trillion, it's close to trillion. Okay, so Don Sahong is 100 times smaller, 260 megawatts, right? So most of these dams, like even the J. Edgar Hoover Dam or the Three Gorges, they actually block the entire river. So virtually it's like the whole tributary, you just block the whole bloody thing. So anything downwards, right? That's why countries like India are very hostile towards China today, is because they are actually sucking up water. And you see states down south, right? They are facing a lot of this problem. So what's I would say unique about Don Sahong is the run of the river. So there's actually 6 or 7 tributaries of the river. They're only blocking one channel, a very small channel. So the river is not entirely blocked. So the kudos to them on environmental planning. Second thing is that because it's run of the river, there's also struggles of fisheries going through. So they actually designed the turbine in such a way that the fish don't get killed. So I know it doesn't really matter to most people, but I think when I looked at that, as an engineer, I thought, yeah, I think this company really thinks in the long term. The third thing that I really liked was that when you look at the management team of MFCB, right, they really got the right people for the right places. And I think the philosophy of Mr. Goh, the CEO, was that he hires businessmen. Now, it sounds funny, right? He said most people hire employees, but his philosophy is that he hires businessmen. So that means when he gets people on board into his senior executive team or even his employees, right, he wants them to think like businessmen and to be able to, generate savings as well as to have skin in the game. So the guy he got to run the Don Sahong project was actually the chief engineer for the Bakun Dam. So if you guys have no inkling about the Bakun Dam, it's actually the largest hydroelectric dam in the whole of Southeast Asia. It's 2,400 megawatts. It's 10 times the size of Don Sahong. And because of that guy's experience, he brought a lot of these technical expertise as well as commercial expertise. And what happened was that he managed to save another cameo, okay? Yeah.
Important, yes.
Important cameo. So what he managed to do is that, I don't know, maybe Thomas or Reggie, if you have experience running projects, right? I was in Shell for 10 years. I've never seen a project that is on budget and on schedule all the time. It's always an overrun, okay? They managed to do it on budget, and below, they were on time and below budget by about 20%, I think 10 to 20%. Yeah. That's freaking amazing to be honest.
To be honest, I've never been on a project that is on time.
Yeah, exactly. So.
All the tech guys that I work with, all the things that I work with, right, it's always delay, right? So that it always happens. So I mean, you just look at Musk, right? He has been delaying that shit for the longest time ever. So it's pretty wild to get a management team in that sense. But I want to dig a little bit deeper into the part you say that the Laos Dam will become the core of its revenue, of this company's revenue, right?
Correct.
So how many percent? If I never hear wrongly, was 97%.
That's right.
Is that what I'm hearing?
Yeah.
So essentially, if I'm buying this company, I'm actually investing into a dam in Laos.
Yes, Laos. Yes. That's
okay,
right.
so I'm buying a Malaysian entity to get exposure in Laos.
That's right. That's right.
Interesting.
That's right.
Are the revenues in the Lao currency or Malaysian ringgit?
Yeah, so it's actually in Lao, but they actually hedge that great question, Thomas. They actually hedge against 4 main currencies, which is actually US dollar, Hong Kong dollar, because a lot of their long-term borrowings are actually hedged in currencies that they say that their strategy is natural hedges against whatever currency they're being paid in. And in Vietnam, as you know, US dollar is quite predominant, even though they have their own currency. But even if you go as a tourist, they rather have you pay in US dollars.
Yes.
Yeah. So what MFCV does is that it tries to use a strategy of natural hedge. Whatever revenue that they're getting, they will try to peg it to the currency. And it's quite interesting also that even though 97% of the revenue comes from Laos, whatever excess money that they are getting in, and Mr. Goh is a very smart capital allocator. He started planting coconuts in Cambodia. So I don't know whether Thomas, when you check, so financial, right?
Yeah, thank you.
So when you actually checked out the YouTube video that I produced for FIRL, right? You actually see coconuts and dams. So it just doesn't permutate. You say, this guy, I thought he's a power generation guy, and then he's got property, and then all of a sudden coconuts.
Diversification lah.
Yeah. So and another interesting fact is that they are also a substantial shareholder of this company called D&O Technologies. You should go check them out. We're not going to cover them today. They're actually an OEM, ODM manufacturer for LED lights for cars. So you know all your day running lights, all that kind of thing. Yeah, so they are actually suppliers to guys like Tesla, you know, all the big names. So in a way, they have proven themselves to be quite, how would I say, quite capable of managing different types of businesses. I think there's something that you have to give it to them credit for.
For sure. And I have a question here.
Yeah.
So I think for a lot of retail investors, right, people are mostly in like fashion brands, FMCG, tech companies. You know, you interact with these companies daily, right? So it's a lot easier to vibe with these companies. But when I'm looking at a company like this, which is essentially a power generator company, right? So
correct.
If we are assuming 97% of revenue is going to come from this hydro plant, essentially we are buying into an energy company, right?
That's right.
A power generator company. How should we look at such a company? Like what are some core matrices that we should look at to understand these kind of companies?
Fantastic question, Reggie. To be honest, you think of it as okay, I'm trying to see whether I can simplify it for the retail investor.
Yes.
The contract in which electricity generation is governed is usually what we call a take or pay contract, in the sense that I'm MFCB. I've come up with my own capital. I borrow money to actually finance the project. But then in return, because the government of Laos does not have that capital expenditure capability to pay, they actually just write a contract in the sense that I'm giving you protection, which is a concession for 25 years. There's a certain agreement for the tariff rate, which is the electricity rate that you pay me. And for a retail investor, what you want to know is, in a year, what is the fixed amount of electricity being sold out? And from there, what is the tariff rate? So in a way, you can, I like this kind of valuation for companies, because the earnings visibility is as long as the concession contract, which is 25 years. Whereas if you look into businesses like Time.com or what's okay, Time.com shouldn't be used as a good example. Time.com are very much more similar to MSCB, but if you use a retail brand like, let's say Nestle, or maybe fast retailing, which is Uniqlo, right? It's a very cyclical sales process, because you've got Chinese New Year, you've got Hari Raya, and then it's really very driven by marketing activity.
Dependent. Yeah, it's very taste dependent.
Case dependent, and then you've got
taste
dependent, yeah. And you've got consumer demand, and then, you know, finicky. If like COVID, people spend less. But whereas if you look at a company like MFCB or Time, right? Try surviving without internet. I don't think any four of us here can survive without internet for a day, right?
I want to add also, because what is unique about this particular, I don't know the technical terms for MFCB, but I know this particular plant, right? The good part is that it actually does not cause a lot of flooding.
Yeah, that's why the run of river, because you don't flood the whole embankment. So it's a run of river. You don't flood the river. Yes.
So also from my understanding, the weather, right, the rainfall, right, is quite consistent also.
Yes.
So that means there's always going to be water flowing, and then they also don't cause any problems to the people surrounding the region. I think they only had to relocate like 50 people. That's the only thing to do this them. So you've got that, and you got that. So it's always flowing. And just to add some numbers, right? Right now, the market capitalization for MFCB is about 3.4 billion. They're adding a fifth turbine, correct, John? They're adding a fifth turbine to the dam. With the addition, they're going to generate anywhere between 500 to 600 million ringgit in cash flow, just pure profit every year.
Yeah.
So you think of it from an investor's perspective. I'm buying this whole suppose I could buy the whole company for 3.5 billion, and there's 500 to 600 million cash flow coming in. What's the rate of return? 14 to 15% a year.
Yeah.
14% is pretty respectable. But that's not the only thing, right? Because guess what?
There's no marginal increase in operation.
Yeah.
Right.
It's
because
fixed costs. It's fixed costs.
You're building an extra turbine, and then it's just gonna roll and roll and roll and roll.
Precisely. It's a business. Yeah, it's a toll gate business.
What if the coconut business go coconuts? You don't know. Right? So you've got all this optionality. Look, the coconut business could fail. They're also in plastic, they're also in solar, actually, right?
Yes.
Solar as well. Solar. So if they can redirect a lot of this cash flow, which are free cash flow, right? They don't need to reinvest too much into all these businesses, and you just take one business to add another 500 to 600 million of cash flow, maybe not that much, even with 200 or 300 million of cash flows, right, from all these other businesses, I think you're paying the price that you're paying today is quite reasonable, and the management that you're paying for is also quite outstanding so far. So that's how I look at it as an investment.
You pay only 6 times of cash flow. You're not talking about So it's quite insane. To be honest, when I look at the valuation, I said, and then just to give another picture on the numbers, right? A lot of people think renewable energy, they think solar, right? Of all the listed solar companies in Malaysia, you combine all their profit, every single thing still cannot make one MFCB's 1 year profit. Just to give you a sense, I won't go into all the, because if you follow the Malaysian market, right, everybody is hot on renewable solar and this. Everybody just wants to buy it.
It's not just Malaysia. It's not just Malaysia. Everywhere, people are extremely hot on renewables.
But then they look at the economics. It doesn't make sense. Here, this company is spewing cash flow
It's gushing.
Yeah, it's gushing cash. So it's like.
Interesting for sure. If you guys are interested in the company, definitely check out the video with John and MJ, and then we can keep going on and on and on and on. But yes, time is limited, right? So I want to divert us to the third company, which is a little bit different, from the first two, which is relatively matured already in the space that they are at and very cash flow positive kind of generating business, right? But this other company, what is it? What do they do? And why do you guys pick this company?
Ironically, it was actually suggested by a client of mine or a friend of mine. And what happened was that she actually had ESOS for the company, employee share grants. So she said, "Hey, okay, John, can you help me? Can you help me check out this company?" So I was reading the 10K filings and was like, my goodness, I never heard of this company before, and I'm so into semicon. So it's another B2B hidden below the layers kind of thing. What they do is, the company is called Entegris. And the joke I have for them is they are the Tupperware supplier for the semicon industry. You know Tupperware? I kid you not. Okay. So if you don't know what I'm talking about, the right term or the technical term is actually this term called FOUB. FOUB. So it stands for, I can't even remember what was FOUB stand for, because it's so funny, but I just remember FOUB. So if you see any YouTube video of how semiconductor wafers are produced, you actually see these robot arms picking up a lot of these wafers and then stacking them into a container, right? And this container is like, sometimes it's transparent blues, transparent orange and all that. Those are actually known as FOUBs. So the reason why you need to have this specialized container, because micro-contamination is so a critical part for quality control in the semiconductor industry. And it's actually engineered, the way it's engineered in the sense that if the wafer is actually pushed through, it actually creates somewhat of a partial vacuum into this container, So it's quite, the vortex of the wave flow. I looked at how they engineer this Tupperware. My goodness, this is amazing. Okay. But that's not the best part. The best part is that this part of the business only constitutes about 25 to 27% of the business as a revenue generator. The two other bigger parts, one is actually what they call specialty chemicals. The other part is of the business is called the micro-contamination. So they, as a whole, you think of them like, okay, I use an analogy of a hospital. Okay, so in a hospital, what do you need? You need industrial gases, your oxygen, all these things. You also need medical gloves. You also need pharmaceutical supplies. You also need cleaning services. You also need filtration. So they are like the ama who brings in all this equipment for the hospital. But in the case, this is for semiconductor. So they sell their micro-contamination, they sell filters. And I'm not talking about your normal Koei filter. It's those very specialized chemical filters, gas filters, for ultra purification purposes. And then the specialty chemicals are to supply all those chemicals for semiconductor processes. I don't want to go too detailed. You think of them like all these supplies for a hospital. He is the guy that is providing for the semicon industry. So that is what makes this company very, very unique in some way. And It doesn't have a brand. I think the only brand it has is the Tupperware lah. You just Google FOUB, FOUB. You will definitely see Entegris. They are the market leader, world market leader for FOUBs right now. Yeah.
Nice.
Yeah.
So what I'm hearing is that no matter what, right, any semiconductor, any wafer fab will actually need their services, their products.
Precisely.
Right?
So Intel, TSMC, you name it. So the beauty about this kind of business is this. They don't care whether Nokia, Kodak, or whoever is going to win the tech war. I like businesses like this because, betting on tech is very difficult. You don't know whether Kodak's going to be around 10 years from now. You don't know whether NVIDIA is going to be around 10 years from now. But for them, you think of them as they're supplying the necessary commodities, disposable materials, and all this for the semiconductor industry. And all these are what we call disposable materials. One fact I forgot to add, 70% of their revenue is recurring.
Wow.
Because it's on the manufacturing line. Because it's on the manufacturing, you cannot siam one. You have to use it. It's like toilet paper.
Toilet paper.
You have to use it, right? You cannot run away from this.
Correct.
Nice.
So that's actually ironically the mode. And then one more very strong catalyst or mode is because these chemicals are so proprietary. If TSMC chooses to buy the chemicals from this guy, now you think of it, if I'm your chemical supplier and you have a very specialized process to get the product that you want, right? If I need to clean the chemical solution, if I were to design a filter, who would be the best guy to design the filter for me? The same guy who supply the chemical.
Same guy.
Yeah. That is what Entegris is about. So they supply the chemical, I supply the filter to help you clean. I supply also the technical know-how and the process to do all this for the. Yeah, so it's like abang adik lah, in a way, brother sister lah. You're like Siamese twins. And then if someone were to switch out Entegris, I think it would be a struggle because all this process know-how, all this proprietary IP technology, you want to take it out, you pry it out. Wow, the switching cost is just going to be insane. MJ, maybe you want to read off the numbers for Entegris if you have them.
Yeah. I want to ask a little bit also about these kind of business, right? So I know you're painting a beautiful picture about high switching costs, IPs, and they really built the whole ecosystem. Great to use them, right? But fundamentally, if they're so dominant in the space already, then firstly, the first question is where's the growth trajectory that they were looking at, right?
Yes,
and then the other part is assuming that they're already so dominant. But we all know that in the semicon space, right, it's an arms race.
That's right.
Okay, so there are always new technology, new. I mean, it's not so fast. It's not as fast as software.
Yes.
But at the semicon level, at the hardware level, right, it is an arms race, and we cannot lie to ourselves, right? So
correct.
How much moat do they actually have, in reality, and what is the kind of growth strategies that we're looking at? Yes, prospects. Yes.
Yes. I think growth, the beauty about semicon today, COVID has really accelerated the need for it. And I'll share with you why I've been bullish about tech. Okay, I have to be more specific. I've been bullish about semiconductor because tech is very big. The word tech is just too wide, right? I've been very bullish about semiconductor because of the automotive industry. And I'll tell you why. In Malaysia, when you buy cheap-end cars, you actually get very lousy things. You don't get Bluetooth connectivity. You don't get all these kind of things. But what I started to see was that sub 50,000 ringgit cars, which is pretty cheap in Malaysia, I mean in Malaysian terms, you get things like push start. You get things like RFID. You get things like all this kind of thing. And it's a feature that was actually very limited to very expensive high-end cars today. Okay. Second thing is actually related to regulations because the seatbelt regulation only came about, I think, 10 to 12 years after it was invented. And today, what you're seeing trends in electronics that help in automotive is that, day running lights is actually mandatory for cars manufactured in Europe. Day running lights. In Malaysia, in Singapore, we take it for granted. It's like a luxury thing, right? But actually in Europe, it's mandatory that your car has day running lights. So what I'm starting to see is a trend of government regulation playing a role in helping the tail of all this electronification of things. The third thing is actually adoption of ubiquitous smart homes, high performance computing, you name it lah, mobile devices. Just take for granted. Just take account lah. I mean, I have two kids. Each has a device. I kid you not. Each has a device. I have 3 devices. MJ probably has at least 2 or 3 devices. That tail is very long. I think
millennials have more. I think millennials have 5 or 6.
Millennials definitely have 5 or 6. AirPods, whatsoever, right? Yeah.
Everything, yes.
Everything, yeah. So I think where I see the risk is really this. The risk is that who will win the technology arms race, like what you said, will be concentrated into a few big guys that have the capex capacity, R&D capacity. But where I believe Entegris sits is in a way material science. So they don't actually need to develop that kind of IP for the arms race for semicon, but they are actually specialty in material science, which has a longer gestation period, longer cyclical change in somewhat. It works hand in hand with semicon, but that's where they buffer themselves against the risk. I think I think they can screw up is actually their loans right now. What surprises me is that they're very cash flow generative, free cash flow pumping out lots of money. I think I'll get MJ to talk out the numbers later. But they took out a revolving credit facility. It's 1 billion. So they'll mark. I think top line. I can't remember the number. MJ will go through it later. But they have a 1 billion senior note. And they keep on renewing it. I just don't know why. I either they are trying to go for an acquisition spree or whatever. It's not clear to me today why they did. So I think that's where I think capital allocation and the management team's capability is key. Yeah, MJ, maybe you can show us the numbers.
By the way, Randolph say semicons. Ooh, you got this. Yeah.
So what you need debt?
What's the top? Yeah, top line. The debt is 1 billion. I've looked at that many
top
times.
Top line is about 1. Hold on.
Yeah.
Top line is 1.86 or 1.9. Almost 2 actually.
Almost 2 and they have this long-term liability of 1. I think that's I think is for me is the biggest risk. Did I answer all your question? I remember there was a second part to your question, Reggie.
Oh, so wait, what's the second part of my question? I can't remember. The second part is about switching, right? It's about switching.
It's about switching costs. I think the beauty, even though they are so dominant, is that they have this rule that no one customer contributes more than 4% of revenue. So you see, even though they can be very dominant, they can choose to favor TSMC or Intel, whatever. The highest concentration at one cyclical period is 10%. But on average, one customer contributes only about 4% of revenue. That's how diversified the income stream is. So, it checked all the right boxes. I was regretting not understanding it earlier. I only got into it probably early last year. Yeah. So I think the risk for me, the big red flag is actually the debts of the recurring, the senior notes of 1 billion. Yeah.
Okay. But if they can keep kicking the loan down, I think that that's fine. But I get what you're saying about maybe it is you don't know what they're doing, right? So that's kind of what it is. Okay, so let's go into Q&A. I think some people have questions. So I think Sandy has a question. Thomas, do you want to take this?
Sure. So Sandy says, backtracking on MFCB, is it required to transfer ownership of the power plant infra to the government at the end of the concession term? If yes, asset sale might also be a major win for the company. Yes,
definitely. And I think, you see, what I'm seeing is there's another company listed in Malaysia called Pastec Engineering. And, MJ and I are pretty bullish about it as well. They are actually, in a way, doing a service to all these, I would say, countries where capital expenditure is sorely lacking. And where they have built this concession kind of business is, I will help fund it, I will help operate it, we will train the local guys. Over time, obviously, they want to hand it over back to the government. And I think the question that boils down is that whether they will be forced to hand over the asset earlier. I think that's one of the major risks that we should look at when we look into some things like this. So in a way, rather than think 25 years concession, no problem, what is possible is also a political revolt.
Yeah.
You never know.
These are politically. I don't want to use the word undemocratic, but I'll just say that they are the corporate governance is a bit unknown.
Yeah,
I don't know too much, right? Like if it's in Singapore, well, first of all, we probably won't get the protection.
Unknown is so political. It's like, this one unknown. It's like not good. Say not good. I don't agree. I don't agree. But it's like unknown.
But okay, if you ask me to bet between, let's say, Laos or Cambodia, I'll probably go with Laos because Cambodia has that history.
Yes.
But again, I have to use the word unknown simply because really it is what it is. And then also the second point about if it's an asset sale, it could be a win for the company. I think that is true if so suppose there's no renewal or whatever, okay? Renewal would be great. But let's say even if they sold it at the end of the 25 years, it's only good, right, if they already have like an existing business.
Yeah.
That they have built some other engine of growth apart from that. But if you just sell it like that, then it's like you own a property and then you sell it, then you get the gains of it, and then yay, very good, right? But I wouldn't see that way. If I'm owning the company for a long time, I want to keep rolling to something.
Yes.
Sandy
because
go ahead.
Yeah, Thomas.
So Thomas, you say something? Yeah, go ahead.
Oh right, because
okay.
if 97% of the revenue is coming from that dam, right, the power project, and basically when you sell this asset already, your cash flows just stop.
Yeah,
exactly.
So,
exactly. That's exactly
it's going to affect the valuation of the company and that's
for sure.
Correct.
So.
Unless they can pay out unless you get the cash is so much that it's more than the market cap and they pay out all the cash. Okay, no problem,
Yeah,
so,
that's right.
So then if you think about it, right, it's a little bit like a leasehold property. At some point in time, right, because all these kind of contracts work the same. 25 years. First 5 years is a happy day, Next 5 years continue happy, but at some point in time, midway the contract, right, valuation will start to kick in, and all the investors will start to questions like it's like a Bala cycle, right? It will go down essentially. Right. Yeah, Bala curve. Bala curve. Essentially, it will go to zero. So then I think Thomas brought a great point there. Yeah, cool stuff.
Yeah, but of course, this property has a 15% rental yield, 12-15% rental yield. That's the only difference.
Yeah, so that's the interesting part. Anyway, Sandy, as a final comment, exactly aligned with what we are saying, which the government try to retain control over essential services and, may legislatively bring it back. So that is a risk factor. I don't want to make us sound like, wow, this is very good, right?
Correct.
Realistically, these are some real factors. Okay, so any more comments and questions, keep coming, keep them in, we can chat about it. But I think I wanna bring out something, clearly from this discussion, right? I can recognize that you guys are not big fans of like retail brands or like consumer front facing kind of businesses. You want to talk about infrastructure, you want to talk about the manufacturing chain, you want to talk about the things behind, right? Which is not easy businesses to understand. Okay, not easy to go in as a retail investor to be in this space, because if a lot of people didn't know, I think in the professional space there are a lot of professional investors that specific one in this sector.
Yep.
Right, so they take these kind of portfolios as a profession, not as a like retail. I just buy this like Nvidia like shiok then we just buy. Right, so I want to dig your brain a little bit as if someone like myself as a retail investor, I want to invest in these kind of spaces like infrastructure, power, semicon. What are some basic things that I got to start with? What are some core things that I got to first do before looking at which company I should pick? Because I probably need to understand the whole thing, right?
Yeah.
Oh, yeah.
I'll tell you. I mean, where what we tell our clients, students, friends, and all that is that actually look at your own industry, right? The reason, for example, John knows the semicon because engineer is pretty much there, so he understands it. Like, for us, that's where we come from. And if you are in the plastic industry, then start looking at the plastic industry because you're going to have an edge that, quite frankly, other people won't have.
Correct.
And the beauty of the stock market is that you can do well if you're buying front-facing companies. You can do well when you're buying B2B companies as well. So that's where we sit. You have to invest in what you understand. And in our case specifically, the reason we know all this is not just because we have like some special education about it. Also, it's simply because we know friends and family members in the space.
Yeah.
Right. Like I bought this company called Dufu Technologies. It's like so niche. They're producing this specific part called a spacer ring in the hard disk drive for data centers. Why did I buy it? Because I know a friend, a cousin who works at WD, who is their supplier. Then so oh, fantastic. And they say, yeah, this company, they hate all their suppliers, but this one they hate the least. So oh, fantastic, right? This is a company that's interesting. So that's where we start. And back to my earlier point, right? That's the thing about being a Malaysian investor, right? You don't get to choose. The problem is that if you take information from the US, the teachings that you get in the books, right? The Peter Lynch and all that, they have a lot of consumer-facing, very powerful brands, right? And so it's a lot easier to just say
Gap, all this,
Gap, Crocs, you name it, right? Yeah. So it's a lot easier for them to do it, and they have what I believe like 20,000 stocks there, so they can afford to say I only invest in retail companies or front-facing companies, to use your language, right? Malaysia is not the case. So you have
because
to,
also of our economy, MJ. Because the economy of Malaysia, we serve what we call the middle tier, and that's why you see in Malaysia, semiconductor equipment company or electronics equipment company is very prominently featured because 50 to 60% of Malaysia's exports actually come from that industry. So in a way, you are kind of like forced. I wouldn't say by but you are kind of forced to understand the industry because it's a big part. And then secondly, I think, MJ, Reggie, we had this discussion about Nestle before that, never saw the light of day, that episode.
We can do again. Yes.
Yeah. So those consumer-facing brands, right, or consumer-facing listed companies in Malaysia, they actually just are like somewhat of a subordinate to the main brands in the US or whatsoever. So like take for example, Uniqlo is very big in Malaysia, very, very big. But then you don't get a chance to participate because it's listed on the Japanese market and all this kind of thing. Another good example would be someone like Dutch Lady. They're big in Holland. They have quite a major subsidiary in Malaysia, but then that's only one. So there's no other benchmark, you see. So yeah, MJ, any other thoughts?
Yeah, So yeah, I mean, that's really what it is. That you have to change yourself for the market. You cannot just be American about it, basically.
Yeah, exactly. Cannot everything American, right? You gotta see it from where you come from. It's like in Singapore, you gotta be in the REITs market. You gotta look at financials,
exactly,
business, because this is the business here, right? So if you want to invest here, you gotta be localized. You gotta understand what is the local economy, right? So I like that point a lot. Great. Anyway, Ichung has a comment, so I want to dig your brains a little bit. I don't know, but one day the internet connectivity in the rural area might become a moat for TM, right? So do you think that that's gonna happen? Like Tesla needs internet, so the Tesla guys, yes.
MJ.
Okay, for rural areas to be AI level 5 autonomous or electric vehicle driving, I think TM has to spend a lot more money. A lot more money.
They need the Mars rover kind of capability, It's hard. Yeah.
Because I think only Malaysia right now we are only fully 3G. I don't know if
it's fully 3G, not fully 4G. 4G is
4G
just
below. So we haven't hit 4G, and then to allow a lot of these other new technologies coming, we need 5G.
Yeah.
So it's like far away. A lot of money has to be spent first,
Exactly. Yeah. We can talk about the whole 5G ecosystem another time, but exactly like what you say, right? Because for 5G, the infrastructure is very extensive, right? That's why it's so powerful. The wavelengths are shorter, and you gotta have multiple signal towers and all those kind of things, right? So we can have the whole 5G discussion another time. I'm assuming no final questions, no extra comments, and if you have them faster, let them come in. But I'm gonna just take this time to thank you for spending time with us, and stay tuned tomorrow for more good content, right? So if you like to hang out with us, join our Telegram group, and also be a member. Do this with us. And if you wanna check out more about John and and MJ, right, definitely go to their channel on YouTube, right, on FIRL, right? So that's where they are. And once again, the Stock Geekout segment is sponsored by Mumu, powered by Futu. And on top of their free one Apple share when you open your account, they're gonna do an enhanced referral program where new users and their friends are able to earn up to 20 Twitter shares. Promotion end this month. Okay, so what are you waiting for? Terms and conditions applied. Once again, not for Malaysian, only for Singaporean. Okay, Mumu. Okay, maybe when they enter the market, then we can do another segment. But yes, so I thank you for your time. I think we learned a lot of great stuff today, especially to see the market from another angle, right? And start and localize to understand what is actually in the local stock market. So I hope you guys learned some good juices. I hope two of you had fun. And let's continue this chat. I'll see you guys next week. Bye.
Bye. See you. Bye.
Woo!